Good afternoon and welcome to our new series, Sherman Wealth Weekly ChartBook, joined by Ashley Perlmutter today to go through a couple of these cool charts that she has put together for us. Ash, how's it going this afternoon?
It's going well. This is our second episode, so we're very excited you guys are joining us today.
Yeah, this is great. 2 in a row is consistency, and consistency is power. April 4th, we're recording this, and cannot start without discussing the quarter in the markets. Quarter just ended, of course, March 31st. You'll see on this chart that we have here just a rocky, volatile start to the year. We were down as much as 20% on the lows of the NASDAQ, 12% on the lows of the S&P, and about 10% off the lows on the Dow. Of course, that's from year to date. Of course, at the lows, we were off a little more off of all-time highs, given that all-time highs were reached towards the end of last year. So this is taking a look at just year to date. So keep that in mind. A lot of you will be getting quarterly statements from your 401k and or investment accounts. So understand that this was the worst quarter since the COVID quarter, the first quarter of 2020. We've talked about volatility a lot on the last week's chart book and the importance of being in a diversified portfolio and staying invested. But you could see just in numbers in mid-March here, just how far off the lows we are. Of course, we're kind of still in borderline correction territory. In the NASDAQ, down around 9% as of this recording. But of course, the S&P and Dow have recovered to only down 4 and 4.5 respectively. So stick to your plan, understand what you're doing. Assume that if you felt like you were taking on too much risk at the end of February, early March, count this as a blessing and an opportunity to rebalance the other way. But if you were thinking that you had too much cash and didn't put any to work during this correction, figure that piece out as well, I guess, on the flip side. And then, of course, lots of potential tax loss harvesting opportunities really early this year. As a reminder, get those Roth and traditional IRAs and SEP IRAs funded and to take advantage, potential advantage of this correction. All right, great. So let us know what questions you have as it relates to that. Of course, this is a little bit outdated with what we just said about the market correction, given that this data is from the fourth quarter of 2021, but you will see just how far off of peak lows we've gained in overall net worth. We'll talk about this more on this show about the consumer and how the consumer is feeling. But household net worth, a lot of this has to do with the home price gain that we've been talking about. And of course, a lot has to do with the market gains from the COVID lows that we just mentioned. So check this out. Pretty astonishing to see. So thanks to Ashley for putting this as part of our chart book. We have household debt service. We've been talking a lot about this as we are hearing from the Federal Reserve that interest rates are going to rise this year, anywhere from 7 to 9 future hikes kind of planned and mapped into the markets based on what Fed Chair Jerome Powell said. We talked about it a couple of times in a row on our snap. So if you didn't hear what he had to say, check out. There was a big article, of course, last week about him wanting to fight inflation at any cost. The economists that we follow and listen to, you could see by these numbers, of course, the 08, 09 housing bubble and crash, you saw consumer debt and household debt really at a 13-ish% and 6.5% debt service, with most folks who own homes refinancing over the last few years. Given the generationally low interest rates, we're seeing debt service at a much lower number. So folks are, of course, every recession, potential recession is different and looks different, but the consumer balance sheets sure are stronger than they were in historic times leading up to where we are today. So pretty cool and interesting data there. We saw consumer sentiment, which was just released. So again, we talked about this in our weekly snaps, but really cool and interesting to see visualized here that the consumer is feeling great end of 2020 all through 2021, and consumer sentiment has literally fallen off a cliff. People are concerned that has to do with their 401ks that they might be seeing. Of course, we've talked about inflation. We've talked about supply chain situations and having an impossible time finding stuff. We're at 6 to 9 months on a couch that we ordered. And a lot of our clients and people that we're talked to are having similar issues with projects that they want to work on and other furnishings. And we know, which we'll get into soon, but auto sales we've talked about before. So lots of negative consumer feelings, and usually that is an indicator on spending, which we do not want to have. The consumer spending is the lifeblood of the economy. So really interesting to see and track how the consumer is feeling. If you want to let us know how you're feeling as a consumer, maybe your rent is going up or gas prices are causing you to make some decisions about some other things that you might want to buy, let us know how you're feeling out there. Personal savings rate, something that we've talked about for a while. We saw people saving. Of course, they had nowhere to go, nowhere to eat, nowhere to travel to. So you can see that huge spike in the personal savings as a percentage of income during COVID. And now we're below the historical average, so 6.3%. A lot of people are worried, is the consumer totally tapped out? So this will be our consumer spending and savings episode of this weekly chart book. So, we really want to hear from you, how you're feeling. Are you saving more or less than you did last year? The first quarter has come to a close. We talked about Financial Literacy Month and maybe doing a spring cleaning and checkup on your finances. Now's a great time to understand, what did you save over the first quarter versus last year? And are you above or below the United States average in terms of percentage of savings as relates to disposable income? What did you contribute to your 401k and other savings vehicles? So good chart here. Auto sales, something that we've talked about time and time again. Cash for clunkers highlighted August of 2009. That was the last time I bought a car till just a couple months ago. So we saw a big spike in auto sales there. And of course, they can't keep cars in the lot right now. You're seeing up to 6 months in terms of deliveries for new vehicles. We heard from some clients and other folks that dealers are getting between $5,000 and $8,000 above MSRP or sticker price, which is amazing to hear. Ash, what do you think about this chart and seeing where we are in auto sales and what we've heard from clients about their inability to get a car?
Yeah, I mean, I was definitely blown away when we heard that people were asking about that much over sticker. I mean, it's wild to see. And you just pass by, I feel like, the dealerships and they're empty as compared to what they were probably in COVID. So it's just wild to see kind of where that's all gone. And then that, I think our next slide is gasoline prices. So those two together is just really interesting. People are buying cars, but at the same time, gas prices are flying high. So
yeah, very interesting. I think we'll go back to this quickly, but we saw kind of light truck sales fall a little bit while auto sales still ticked up, whether that has anything to do with the gas prices to fill those kind of gas hogs, as they were traditionally called. Just a massive spike. I know that this was starting before the Russia-Ukraine war, but I know that we see a huge spike right here. All the way up. We did see it level off. I did notice that it's probably 30 to 40 cents cheaper than it was at the height of the crisis, which hopefully will give some relief to the consumer as they fill up their cars. But just a massive, massive change, over $1 more per gallon. Huge pass on to the consumer. So like you said, something has to kind of give between gas prices, auto sales, and then our next slide, which is commodities. So we're seeing just the price of everything go up tremendously. We talked about this a bunch a couple of weeks ago as the Russia-Ukraine war started, but corn, wheat, all the metals, aluminum, nickel, even we had that story of nickel going totally parabolic and vertical. Anything that has an input it seems to be going up. Lumber we've been following for quite some time, which has a lot to do with new housing starts and you know, the remodeling that we've been talking about. But just if you take a look at this, I mean, commodities were asleep for so long, and they are awake and literally parabolic from the COVID lows. Anything that you've noticed in terms of input costs that have affected anything that you've been looking to buy or seeing the price of?
Yeah, I mean, we talk about it all the time, just like food prices, you know, restaurants. You go into the restaurants and I feel like a lot of things are $1 to $5 more expensive than maybe they once were. So it's all kind of, I feel like, commodity prices to get it there and get everything made for us.
Crazy to see. Crazy to see. We'll see how that has an impact on overall consumer spending. One thing that we wanted to just touch on was the yield curve. It's everywhere. People are talking about it. Predictor of, I think it's 8 of the 9 last recessions that we've had within this country, where the 2-year yield becomes what's called inverted to the 10-year. So you can see from this chart, at the height of COVID was the steepest it's been in quite some time, 2.91%, meaning that short-term interest rates were 2.91% cheaper than longer-term interest rates. And you'll see from this chart that inversions occur on average. Here we see 9-month and by 23. So they say between about 16 to 17 months after a yield curve inversion. So we got a yield curve inversion last week. We're going to have to whip out the calendar and see what happens, what's going to happen crazy 16 months from now. Of course, when we saw this around this time, it dropped, didn't, I guess, technically invert according to this slide, but we did see it in 19 and everyone was feeling great. And then boom, COVID came. So you never know what kind of black swan event will happen. Hopefully there's no global pandemic. We're just getting out of that, but obviously you can't see it yet. But if you want to believe that the yield curve and its inversion is a predictor of recessions, looks like we have about on average 16 months from now, as it did invert last week. Doesn't mean we don't know the severity of a recession, don't know how long, you know, those types of things. But this is just, of course, a data point, and we're not predicting anything for the future, but it is interesting to see where we now have 10-year treasury yields trading below 2-year yields by 0.06% or 6 basis points. So something that we'll definitely keep track of. And then finally, we talked about it last week. And we saw this in not only home sales falling slightly off the top, also refinancing applications are totally dried up. And the major culprit is, of course, interest rates. Average survey, 4.7%. For the week ending, March 31st. So at the end of the quarter, last Thursday, 4.7%. So we've been talking to a lot of people. Some articles now are how first-time home buyers are having to walk away from contracts potentially. We see some of the home builders reporting that contracts that they signed months ago are having an impact on deliveries here. So We urge you, if you are a consumer in the market shopping for a home, to check with your loan officer, realtor, whomever your trusted source, financial advisor may be, but flush out to make sure that you still can afford the home, condo, townhome, et cetera, that you might be buying. Relative to just a couple of weeks ago, we could see just the dramatic moves of rates since the start of the year. Really good time to check in with those folks if you are in the middle of shopping. I don't know. This seems like a great quick 10 chart hit. Anything else that you want to add before we wrap up?
I think we touched on all the big points for today, but if you guys have any ideas or if there's any things that you want us to touch on, let us know and we can definitely create and pull a chart for you guys, and we're happy to talk about it. Email us at info@shermanwealth.com. Like Brad said, we'll be back next week for you guys. So have a great week.
Have a great week. Thanks for watching.